Okay, excellent. Episode 8. Today we're setting up an emergency podcast. I know you've got to go, so we won't take too long.
That's fine.
We are discussing the autumn budget. Before we get started, though, did you see Sunak's passion?
Yes. Now, where was his passion? Before the election. But yeah, I mean, this is the way it goes. All of a sudden, everyone becomes passionate when somebody else is in charge.
That's it.
Yes.
The whole time he was prime minister, I said to Kean, I said, "Have you seen it? He had your headphones on."
Yeah.
Didn't believe me. I said,
Yeah.
"Yeah, no, he was going for it."
But obviously, just for our viewers, we are not politically motivated here at all in any way. We are neither Labour nor Conservative. We are very, very independent. So our views are very much independent to either political parties. So just want to make sure that everyone knows about this as well.
Aware.
Yes. Yeah.
Okay, let's get into it. So we are discussing we've got a few topics to discuss within it. However, we're going to stick to property. We're not going to talk about anything else apart from what affects the property side of it. So we've got the stamp duty surcharge changes. We have the capital gains tax, property unaffected. And then we will be looking at the effects on the interest rates as well. So the first part, the stamp duty surcharges increased by 2% for purchases of additional properties, going from 3% to 5%. Now, Zad, when you first heard that, what were your initial thoughts?
Well, see, when you look at the overall picture, the bigger picture is that there is a lack of properties for renters. So they really should be encouraging landlords to come into the market, not take them out of the market. Of course, it will raise extra revenue for the government, for sure. However, it will stop people even getting in. I know several clients of mine that I got a call last night, and what they said is that, look, they've decided that it's going to cost them an extra anything from like £7,000 to £15,000 because we're buying bigger properties in London as a buy to let, and they were looking at pulling out because they really don't want to pay the extra percentage, or they're going to talk to their agent to see if the owner will drop the price by that amount in order for them to go ahead. But either way, I think they've lost the overall picture, whereby they've got to encourage landlords to get into the market rather than they've done it the other way around. I would say that in order to encourage landlords to get in, they should have left the surcharge exactly as it is, and maybe take up the capital gains tax so people don't sell, so that you keep them in, and then encourage people to come in even more. But this way, what they've done, they're encouraging people to say, look, capital gains tax not affected, you can sell it, and that's it, you can get out. But in order to get in, you've got to pay more. That to me is basically the other way. It's the other way around. It shouldn't be this way. Yeah. But of course, they're doing it for their own reasons, to raise the revenue, and that's what they're doing it for. I don't agree with it, but then there you go. But I'm not in the government, so yeah.
How did you process it, Kean?
Well, the bit that shocked me the most, I didn't realize they could actually do this, but they increased it pretty much effective immediately. So from midnight that the budget went live, which would have been the 31st, the morning of, it was immediately effective. So even if you were in a chain or even an individual property sale, even if you get your solicitors and the agents to rush it as fast as possible, it's still a very tight deadline.
Well, no deadline. Actually, the deadline didn't exist. It's by the time it came out, about 3 in the afternoon, 2 in the afternoon. By the time they announced it, and everyone digested it. Solicitors shut about 4:30, and then it came into effect from this morning.
Yeah.
So they gave absolutely no warning.
Yeah.
No deadline, basically.
Yeah, they leaked a lot of information beforehand, but this was one that no one.
No.
It kind of took everyone by storm, didn't it?
Yeah. They did announce that, or not announce, but they leaked that they may put up the capital gains tax.
Capital gains, yeah.
Everyone was looking at that side, and they did not look at this side, which basically will affect, as you say, Kian, so rightly, people that are in the chain, people that are buying, people that called me last night and they were saying, look, they're looking to pull out because of this. They got caught unaware, and it's a little bit underhand, but hey, that's what governments do. They do things that people are not expecting in order to get the money in. Yes, yeah.
Excellent. Well, okay, let's transition to the capital gains. As you have mentioned, that the CGT capital gains is increasing for both higher and lower rate taxpayers. However, residential property is unchanged. That's effective immediately as well. So the CGT will remain at the lower rate of 18% and the higher rate of 24%. However, the sale of other assets such as shares, the lower rate of CGT will increase from 10% to 18%, while the higher rate rises from 20 to 24%. Now, when I say other assets, what other assets are there? Obviously, we've got shares. Anything else?
Yes, you've got paintings. You've got classic cars. You've got wine. You've got drinks, whiskey, wine. These are people do buy these as assets, and they hold on to them, and then they sell them on. There's different variety of assets that one can have, not just property. So they've brought up the rest of the asset class in line with the property class, basically. So if you look at it now, everything that you own, so people were thinking, well, hold on, I don't want to put my money in property because it's too expensive when it comes to CGT. I'll go and buy painting. I'll go and buy classic cars. I'll go and buy shares. These are volatile, basically, but property is the only thing that is the least volatile when it comes to assets, but everything else, as it's obviously within reasons, the volatility comes in. So they've thought, you know what, as people were shying away from property, let's bring the other asset class up, because you see, the government looks at statistics and think, hold on a moment, in last year or 2 years or 5 years or 10 years, whatever it may be, they're earning. People are buying and selling shares. They're earning a lot of money on dividends, that kind of thing. So let's bring it up. So that's what the capital gains tax is. They brought it up in line with property. Very clever, very clever. But that's what the governments are. They're there to be clever, basically. Yeah. Yes.
Do you have anything to add?
Only that, just like stamp duty, that one's effective immediately, I do understand.
Yes, that's right, yes.
Aside from some reliefs, which are extended to the new financial year.
Yeah, I mean, there's always, little reliefs here and there, but obviously it's not for us to discuss it here. But yeah, I mean, as a general rule, property itself has stayed unaffected, which is 18 and 24% CGT, which is great.
That's good news.
Which is good news. I mean, good news for people that want to sell their properties and cash in, for sure. How long will they see if the government sees a lot of people doing that? They think, well, in the next budget, which will be spring budget, they may just have a look at it and think, hold on a moment, we'll have to do something with this as well. But it's one of them, suck and see.
Yeah. The effects on interest rates. So will the changes to tax delivered in this budget impact the Bank of England's decision to increase, decrease, or leave the current interest rate? Now, last time we spoke, you're saying it's going to come down. Are you still believe in that?
Yeah, yes. I mean, the trend is down. That's for sure. Whether they're going to lower it in November or December, yet to be seen. Will this budget impact it in any way? Look, this budget has done no one any favors, especially businesses, right? So, but it filters down. It's not, they've taken up the minimum wage to £12, something, whatever it is that they announced. Yes, not immediately. That's from next April. However, businesses where they were going to give a wage increase, they're going to think twice now. So all of a sudden, you've got the working class that's going to be affected because they were in line to be to get a wage increase. Now they're thinking, well, hold on. The business are thinking, well, I've got to pay 1.2% extra on national insurance, and it was from 9,100. It is now dropped down to 5,000. Every business who employs people are going to be affected. So on that basis, so if me, yourselves, as business owners, if we were going to give an increase in wages next year, this is going to affect our business. So what the government is basically saying, simple, don't give it to your staff. Don't give wage increase to your staff. Give it to me. That's what they're saying, basically. And the Chancellor said, look, businesses either have to take it on the chin or just don't pay any wage increase next year. It's up to them. But what he's saying is that we need it more than they do. So it does affect the normal person going all the way down. So interest rate, at this stage, I don't think this budget has done anything that will take the Bank of England from increasing or decreasing. They're looking at inflation. Will inflation go up because of this? Maybe, because people are thinking, well, hold on, I'm going to pass this on to my customers. I'm going to pass this increase in everything that is happened to my customers. So if I've got to put the wages up, minimum wage up, and the business is going to it's going to cost the business more money in order for national insurance, all of that, hold on, I'm going to pass on to my customers. So inflation will start creeping up again. It's too early to say at this stage, but as we are here today, the effect will be seen not next month, not the month after. The effect will be seen in 6 months or 9 months down the line. So if you're asking me if interest rate is still going down, I would say my guess is yes.
Yeah. Kian?
The only thing was this will only catalyse the exodus of landlords and investors from the industry further, no? I mean, the incentives for becoming a landlord investing in property is going down, and the barrier for entry is getting taller and more expensive. So I imagine there's no change there, really, even if the interest rates do come down.
Yeah. Of course. I mean, they've increased the barrier for landlords to get in by an extra, 2%. It is hard to get in, even for some. There are people out there that think, you know what, I'm going to invest my money in property for my pension. And they are kind of stopping that as well, in a way.
Kian, I've got a question for you. Now, when you'd go to a shop, you've probably done it many times. When you go to a shop, you've bought something, the next day you wake up and you go, didn't really want to buy that. Wish I could take it back. Do you think people are having buyer's remorse, or do any of these changes not affect the people who voted? What's your opinion?
You'll have to roll with the punches, even if you voted them, if you didn't vote them in. Obviously, not in a position to get political, but I mean, they did say from the start. Rachel Reeves said that it was going to be a difficult budget for everyone, but it's impossible to look at the list of changes and not feel it in some sort of way, regardless of who you are, financial situation, wherever you lie, you're going to feel it in some shape or form. But
even if you use the buses, you're going to feel it.
Exactly.
Yeah.
Even if you fly with private jet or economy, you're going to feel it.
Yeah. Whichever way you travel, you're going to feel it. So they basically hit everyone with it. Yes.
Everyone with it. Okay. Excellent. Thank you very much. I know obviously you've got a meeting,
sure.
So we're going to have to close up for today. But yeah, that was great. We'll be doing this again for the November 7th, which they will be talking about the interest rates. So in the meantime, we'll keep doing what we're doing, and we'll see you all then.
Stay tuned.
That's all for this episode. As always, thanks for watching. Let us know your thoughts by leaving a comment below. If you enjoyed, be sure to like and subscribe to see more videos from us in the future. Join us next time, where we'll be discussing the biggest developments in the property investment sector and how they may affect you.